Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top stories. IMF cuts India GDP forecast for this year to 6.8 from 7.4%. US growth forecast slashed to just 1.6% in its latest World Economic Outlook. World GDP forecast unchanged at 3.2%. Sell-off continues on Dalal Street. Nifty falls 257 points to close below 17,000. Broad-based selling across most frontline stocks as the spectre of interest rate hikes continues to haunt investors. A day after TCS reports a bumper quarterly profit of more than 10,000 crore rupees, Business Today TV talks exclusively to the company's COO, who says TCS is looking to end work from home soon. Just days after the launch of its first e-scooter, Hero Moto already has eyes on the global EV market. Company chairman tells Business Today TV that more cheaper EV options are in the pipeline. Telecom Ministry summons handset manufacturers and service providers on 5G non-compatibility, presses companies to issue software updates which will enable 5G services currently missing from most handsets. The International Monetary Fund has some dire warnings for the world economy. Releasing its World Economic Outlook for October 2022, the IMF has slashed GDP growth estimates for most advanced countries. While the GDP forecast for India has been slashed by 60 basis points, for the US, the cut is larger at 70 basis points. The Chinese economy is set to slow down its growth by 10 basis points. However, the estimate for the EU area has been raised by 50 basis points. According to the IMF, the cut in India's GDP forecast is on account of subdued external demand and weaker than expected growth in the first quarter of the current fiscal. The IMF has also pegged India's inflation for the current fiscal at 6.9%, much above the RBI's upper target of 6%. Some of the important observations by the IMF. The worst is yet to come and 2023 will feel like a recession. 1/3 of global economy is likely to contract this year or the next. US, China and the euro areas will continue to stall the world's economic growth. The energy crisis, especially in Europe, is not a transitory shock, and that price pressures are stubborn and will remain major concern for policymakers.
Our global growth forecast for this year is unchanged at 3.2%, while our projection for 2023 is lowered to 2.7%, 0.2 percentage points lower than the July forecast. The 2023 slowdown will be broad-based, with countries accounting for 1/3 of the global economy expected to contract this year or next. The three largest economies, the United States, China, and the euro area, will continue to stall. In short, the worst is yet to come, and for many people, 2023 will feel like a recession. In the United States, the tightening of monetary and financial conditions will slow growth to 1% in 2023. In China, we have lowered next year's growth forecast to 4.4%. due to a weakening property sector and continued lockdowns. The slowdown is most pronounced in the euro area, where the energy crisis caused by the war will continue to take a heavy toll, reducing growth to 0.5% in 2023. Almost everywhere, rapidly rising prices, especially for food and energy, are causing serious hardships for vulnerable households.
A third consecutive day of sell-off in the Indian stock markets, broad-based selling across most frontline stocks and a sharp fall in index heavyweight Reliance pulled the Nifty 50 lower. The index ended below the key psychological mark of 17,000 today. Even as results season goes underway, the Sensex has lost more than 800 points. The losers were led by Divi's Labs, which was down 5%. Other big laggards included IndusInd Bank, Eicher Motors, Nestle and JSW Steel. There were just 3 gainers among the Nifty 50 stocks: Axis Bank, Adani Enterprises and Asian Paints. Infosys President Ravi Kumar has quit. The IT major informed stock exchanges that Kumar has resigned as president of the company effective today. The resignation comes just 2 days ahead of the quarterly earnings announcement by the company. In his role as president, Ravi Kumar S. led the Infosys Global Services Organization across all industry segments. Infy is slated to consider a buyback proposal in its meeting on Wednesday. Hero MotoCorp's entry into the red-hot e-scooter market with its Vita brand has ramped up competition in the market. With the clout of the world's largest two-wheeler manufacturer behind the new launch, the EV market is set for a big change. Business Today TV's Chetan Bhutani got to know about the future of the EV industry as well as that of Hero Motors in an exclusive conversation with its chairman and CEO, Pavan Munjal.
Okay, well, the Vita V1 is here and I'm joined by the chairman and CEO of Hero MotoCorp, Mr. Pavan Munjal. Pavanji, thank you so much for speaking to Business Today.
Thank you.
First question to you, sir. Tell us about the Vita V1 and the pricing about it. What made you launch this product at the time when India is at the peak of its festive season? Do you think this would help you garner more volumes and probably pent up more demand for the Hero MotoCorp as a whole, sir?
Let me say that not just Hero, but the entire world has been waiting for the Vita platform to come out and launch its products. We didn't wait for the festive season. We did not have to wait for anything else. We just waited for everything to get right. This is not the first EV in India. We wanted to fully test the products. You've seen our advertising. It talks about 200,000 kilometers of testing, 25,000 hours of testing. So that was the only criteria for us.
Right. Pavanji, if you could talk about how the export market for this product looks like. Are you going to stay with the conventional Hero markets that you have always been focusing on, or initially the plan is to focus on that and then eventually move on to other markets?
First of all, we are not going to wait for the entire Indian market to be serviced before we go global with our EVs. We are going to be starting our global business with our EVs, with Vita V1, very soon. Also, it's not going to be just our traditional markets where we are present with our ICE vehicles. We are looking at Europe, we are looking at Latin America, we are looking at Asia. So those are the few markets we will start simultaneously.
Right. Pavanji, if I could also ask you as to how the ICE segment is going, because now we have the great range of Vita V1 products.
We are here for the Vita V1 launch.
Right.
We will only talk about
no
the
problem,
Vita
sir.
V1
I'm coming back to that only, sir. So Vita remains the mother brand for all the electric vehicles under the Hero portfolio?
Yes, that's the idea. Vita is the umbrella brand, and within that we will have, starting with Vita V1, Vita V1 Pro and Vita V1 Plus. Going forward, the mother brand will remain Vita.
My last final questions to you, sir. As you are growing further with the Vita brand, sir, the affordability factor comes into place for the Indian market, sir. You've launched it at a very competitive price, and there have been arguments as to how if Hero could probably lower down the price further. So, can the viewer and the consumer expect more affordable products under the Vita brand going forward, sir?
Well, you saw for yourselves during the launch the specifications that were announced, the packages that were announced, the entire ecosystem that was announced. This product is full of features, full of convenience, full of delight for the customers. And everything has a value. We are clearly giving value for money to our consumers.
Absolutely, sir. How much are you investing in the electric vehicle part, sir, under the Vita segment? Any amount that you would like to tell us, sir?
No, I'm not specifying any specific amounts for the EVs. We've already in the past said the total investment that's going into the company, whether it's in the future of mobility or it is in the current ICE vehicle expansion. We have a whole host of products getting ready on the ICE side as well.
Right. The last question, sir. Towards the end, how are you anticipating the demand for Vita, considering you have a whole lot of competition in the market? How are you anticipating the growth for this segment, particularly Vita V1, considering the first two babies are out of the hero stable?
I am very gung-ho. I am very optimistic of creating very good demand for Vita V1 Plus and Vita V1 Pro.
All right. Sloan Energy all set to retire 584 crore rupees in debt by the end of this month. The company's 1,200 crore rupee rights issue opened today. The proceeds will be used to retire part of the 3,200 crore rupee debt in two tranches. The first this month and another amount of 316 crores later this year. The rights issue of 5 rupees a share is open till the 20th of October.
Firstly, I see the probability of that happening is very, very minimal. Having said that, in the theoretical chance that such an event happens, the good part about our rights issue is that there is no minimum threshold. So unlike some of the other end-use clauses which have a threshold of at least 90% subscription level, we are not bound by that. So out of the 1,200 crores, no matter what the amount has been subscribed to, the company would have the right to take those funds and close the rights issue. So there is no minimum subscription threshold that the company is bound by.
So is Suzlon in its new avatar again an attractive pick for those who burnt their fingers in the script earlier? Will Suzlon 2.0 be a better investment? My colleague Sakshi Batra spoke to Nilesh Jain of Centrum India. Here's an excerpt.
With this rights issue, there is somehow hope that perhaps the company will be able to revive its fortunes for itself and be on the growth path. Do you believe this company's rights issue will help the company and the stock to regain on the upward territory? And what are the kind of targets that you're looking here?
On the lower side, it has also tested the lows of 5 rupees as well. So looking at the overall broader structure, I don't see any major up move because of this right issue. This company has a lot of debt, as I mentioned, so that they need a strong revival strategy to pay off that kind of debt. So purely, basically looking at the right issue, I don't think so. The stock will react extreme, on a positive side. There might be possibility of some sort of pullback towards 9 to 10 rupees. If at all we get that kind of pullback, that could be a good opportunity to exit.
Okay. And what about the existing shareholders, all of those people who have held the shares? What would you advise them? Should they participate in this rights issue, and how will it really benefit the shareholders of Suzlon?
Pure play from a short-term gain perspective to gain this advantage. One can invest, but the focus should be on a trading perspective, not from a long-term perspective.
Okay, and what about new investors who don't have the shares right now? Is it at all advisable for them to enter at this point in time amidst the rights issue?
Stay away. I think it's a very straightforward answer for a new investor. Do not get trapped. And we have seen the value destruction. I'm not saying that stock will become zero from here. There is very, only 7 rupees. So people are getting trapped and getting attracted. We are getting Suzlon at 7 rupees. And what if the stock get double from here? See, there's high probability for that. I'm not ruling out that kind of probability. But problem is that stock may consolidate, and we all know the fundamentals of the company. Technically, the stock looks weak. So looking at the parameters, I think it is better to avoid taking any contra bet in Suzlon as of now. And if somebody wants to play as a trading bet, I think one should wait for right issue to get over. There are possibility that stock might slip slightly further lower side. And if you get near about 6 rupees or 5.5 rupees, probably those levels are the good levels for taking a trading bet and a contra bet with a stop loss below 5 rupees. And on the higher side, if at all you get 9 to 10 rupees kind of levels, that's a good level to exit from these stocks.
Union Transport Minister Nitin Gadkari has unveiled a car powered by a hybrid flex fuel and electric engine. The first of its kind pilot project involves a Toyota Corolla model imported from Brazil. The car runs on flex fuel, a combination of ethanol and petrol, as well as an electric powertrain. The fuel mix can even be 100% ethanol. Flex fuel cars are currently used in Brazil, US and Canada. Welcome back. TCS has crossed a new landmark by posting a quarterly profit of over 10,000 crore rupees for the first time. This comes at a time when the world economy is in the grips of uncertainty and attrition at an all-time high. Business Today TV managing editor Siddharth Zarabi discussed these issues and more in an exclusive interaction with N. Ganpati Subramaniam, the IT Major's Chief Operating Officer and Executive Director.
Can you tell our viewers what contributed to this performance, and do you expect this kind of performance to sustain given some of the headwinds that are being spoken about globally?
Overall, we had a very broad-based growth. I think all our markets did well. All verticals did well. Retail and CPG vertical really grew 25% plus year on year. Banking financial services, which is our largest vertical, grew by about 3% sequentially. On top of the great quarter that they had in the last quarter. Overall, we saw a broad-based growth. And what we also saw is that, we have the products and services to be relevant to our customers, whether they are optimizing, whether they want resilience, or they want to transform their business. In all these cases, I think our propositions are very relevant to our customers, and they are doing more with us than with others.
Leading lights of economic commentary globally are talking about the possibility of a recession in the United States, Europe, 3 months, 6 months, 9 months, take your pick. What are you picking up and hearing from your clients with regard to how confident or pessimistic they are about their own economies?
See, we always operate on a basis that macros are something that we need to take note of, but we don't pay too much attention to that, right? Because, we believe that whether it is irrespective of whether it is the recession or whether they are in optimization mode or whatever be the thing, technology has become the staple, right? Technology seems to be the solution for everything. I think the pandemic has proven that beyond any doubts. So from that perspective, I think we always, are focused on clients. Look at clients what are they aiming to do in the short term, what are they aiming to do in the long term, and then tune ourselves accordingly. So from that perspective, I think there are nothing that I can call out as a very big thing, barring the fact that in Europe our customers are quite worried about the energy crisis that is there, and whether they all seem to be really focused on how they are going to tide over this particular winter. In that case, for example, if there is an energy crisis, manufacturing could get affected, factories could get shut down, and that will have some impact on the manufacturing vertical of our business, right? But otherwise, retail is doing well. There may be some, for example, discretionary retail or fashion retail those kind of things might get affected a bit. But overall, we don't see any other thing except manufacturing to call out on this front.
How are you managing the Forex situation? I think that's perhaps one of the biggest challenges that you must be facing, the rupee and how it is performing vis-a-vis other currencies. Well, what's your view on this?
No, there is the volatility in the Forex market is quite significant during the last quarter, but we have a very established hedging program, number one, to deal with it. At the same time, we have a very diversified business. We have a global operation. In each one of these countries where we are present, we have a local workforce and local costs and all that. So that naturally acts as a hedge, in terms of some of this. But our intent is to make sure that, we protect the downside, right? Rather than, worrying about the upside. Right?
One of the other notables that's been noticed and spoken about as far as this quarter that we are discussing is concerned is the rate of attrition at around 21.5%. How significant is that? And more importantly, what's your own view about the coming quarters when it comes to this important metric?
See, that 21.5% is on a last 12 months basis. The way that it is calculated, that it will remain at that high for the next few quarters, right? But I think as I explained last time when we spoke, Siddharth, that this whole attrition and the demand for technology services happened because many companies did not hire during the pandemic, and everybody scrambled to acquire those resources. And we believe that that's particular phase is over. And many customers whom I've talked to, they believe that they have the necessary talent acquired now, and it will taper down. And internally within TCS also, we are seeing that the absolute numbers, attrition is coming down. And I think our focus is to retain our employees, the employees that have been with us for a longer term. We would like to retain them. And we've also added a lot of fresh talent. We hired about 100,000 people last year. This year, we've already in the first half of the financial year, we have added 35,000 freshers to the whole thing. For the financial year 24, we have already started hiring. The national qualifier test, we're really pleased to say that 500,000 people have registered into that written test. So I think there are no supply chain side issues, right, for us from a talent perspective, right?
What about those who may be moonlighting? Would you continue to retain them? You triggered this debate some months back on a Business Today event, and we have heard all manner of people comment about it, including the HR head of the company. You think this is a debate that will continue for some time?
No, I think it'll be there. That debate can continue, but the way that I will answer this is that, look, first of all, we have a long-term commitment to our employees, right? And that commitment is reciprocal, right? That's the first thing. Second is that we have very clearly codified in our contracts with our employment contract with our employees that they will work only for TCS and they should not work for anybody else, right? And as I mentioned in that conference, we feel that it's an ethical issue, and it doesn't. I think the reciprocity of commitment is very critical, and it's against unless that is there. It's against our own value systems. The way that I'll put it. On a lighter side, I will also say that day before yesterday was a full moon day, and number of employees, and including me, were at the launch of the company, enjoying the moonlight and really worked out of our office. It felt really great.
Has the hand of your HR department been forced on this in the recent past?
No, see, there are always some debates, but our view is that, look, the IT sector has different operating models, right? There are services that one can provide which may allow such a moonlighting kind of model, right? But our business, our operating model, we work with the Fortune 1000 companies, and the way that we deliver some of those mission critical systems, engagements, etc. We believe that the reciprocity of commitment is very crucial for us.
One final question, because we are talking about employment. Where does the work from home, hybrid work environment stand from your perspective, both as a leader of the industry and overall the latest trends, especially from the younger elements of the workforce that you may be observing? If you could share those with our viewers.
Overall, the return to office is something that's been pushed by us, and we have asked all our employees to come back to work and come back to their base location. Right? It's very important for us because we would like to get them into offices for strategic discussions, for typical face-to-face interactions, or client visits management, and all of that. So about 30 to 35% of our employees are already coming to office at least 2 to 3 days a week. That's the trend that we have seen. And I think that will probably continue. I think the future of work is a larger debate. And we are also exploring that in terms of, should we go for a hybrid? Should we go for a full-time back to work in offices? And the people who have come to office, they all unanimously giving us feedback that, look, this is something that we are missing. And we have missed, and we would like to have this because, we all have grown up in the companies, looking at our seniors, looking at our peers, building our own talent, and then receiving mentorship from many people. And that's something that you will never be able to get it holistically when you work in a pure remote environment. I think in my own perspective, I think people understand that, and it's only a question of time before they all back in office.